Folks, good morning and welcome to Swing Trading Today. I already got a like. Isn't that outstanding? Thank you very much for that. I appreciate it. Good morning, everyone. Let's begin with the headlines. There's not much out there in terms of headlines. It's early. The coffee's just starting to kick in. There's not much out there in terms of headlines, which I've repeated 3 times now. And one interesting headline here is that we have China says its economy grew 6% in the third quarter, slower than expected. This is what they're admitting over in China. They have a nationalistic economy right now, or nationalistic populist, and it's very essential to them for the Chinese, the CCP, Chinese Communist Party, to save face. And the fact that they're even admitting that their economy is slowing speaks volume. I would bet that it's probably slowing even further than what they admit. I'm doing analysis right now on the Chinese housing bubble that is over there, and just the absolute and stunning overdevelopment and the poor construction of these admittedly beautiful buildings, really pretty buildings, but they're falling apart. And I'm going to grab some photos and footage for next week. And maybe I'll do it over the weekend I'll put out a best stock charts on maybe Saturday or Sunday, one of the two. I'll put it out there and I'll illustrate that China is not all that it's cracked up to be. They have a huge amount of debt. I've been doing a lot of analysis on this, and we're going to keep an eye on it moving forward because it's a problem. It's a problem in terms of influencing our companies. It's a problem in terms of their economic influence around the world and influencing our companies, the NBA, other companies, and their totalitarian stranglehold over their citizens. And really, are they going to be the growth engine for the world that they promise to be? And their currency is certainly not going to be the adoptive currency anytime in the near future because it's absolutely so rigged. So more to come on this. Moving on to the economic data. Not much going on here, but what's worthy to point out is that industrial production yesterday fell negative. The prior read was spot 8%, so there was some growth. The anticipation was for a decline, but we came in worse than expected. Now, capacity utilization, basically the amount that we use our manufacturing capacity, we saw a drop here, but that was expected due to the GM strike. So no shock there. Today we have Fed head Kaplan, Fed head George, Fed head Clarita out there talking. Leading economic indicators coming out at 10 a.m. No big deal. This is earnings season. It's silly season. That's what matters most. And of course, the tweet out of the blue that could send these markets roiling at any given time. So let's move over into the pre-market activity. But first, before we do that, for those who are just joining, if I could ask you to hit that like button, it helps me out a lot. Hit the subscribe button if you watch this on YouTube, and that bell, you get notified of when I go live in the future, because I don't always send out emails because for fear of sending people spam, and I don't like to do that. So not many people are up at 5 a.m., you know what I mean? So I don't want to spam people. So let's get to the pre-market activity. We did do a Thursday night live last night discussing the weekly setup for the close of the week. So if you missed that, catch it on the replay. I have it hosted on YouTube and on Facebook. We went over several stocks. At current, it is 5:04 in the a.m. These are 4-hour charts, and this bar just opened up less than 5 minutes ago. And you can see that this chart of the dollar continues to show weakness in the dollar. Now, why is there weakness in the dollar? Well, besides the fact that we have quantitative easing now admitted, they won't call it that. It's happening. It's occurring. The other reason is that you have headline off of Zero Hedge. An amazingly good Brexit deal, but a constitutional challenge looms. So, is there a deal? No. Is there an incremental push towards a deal? Yes. When you have Jean-Claude Juncker, the president of the EU, who is just a socialist, he's admitting that there may be a deal, and he's not supporting an extension of Brexit. In all probability, you're going to see a deal here. And the past trade has been when you get a negative headline on Brexit, you see money rotate into the US dollar. And you could see that of late, the dollar has been weak. Why? One of the reasons is, of course, QE. The other is the stress being taken off of the Brexit news, the fear of a hard Brexit, Britain leaving without a deal is becoming less and less probable. So that means that you're seeing less fear, less money rotating into the dollar. So if the dollar is weak, what are we looking at? We want to see commodities. Are they catching a bid? So last night we spoke in great detail about oil. And we'll go to West Texas Intermediate. Actually, no, I have Light Sweet up here. Light Sweet, same deal. And you can see that on a 4-hour basis, we are moving higher. Beautiful consolidation here. We had negative news that came out on Wednesday evening that crude inventories had built up very, very high levels. What did oil do? Naturally, it fell. But then it reversed to close positive. Good morning, Sam. Congratulations on the new house. Good luck with it, brother. So we have a breakout on crude oil. So what's going on here? Well, I think that what we're seeing here, and this is just hypothesis at this time. It's not proven, but there are ways to prove it. I think that what we're seeing is a coordinated effort globally to goose, probably one last gasp at global growth. Basically an insulin injection, a heroin injection, probably the one that's going to give the world's global economy an overdose. We're seeing vast amounts of liquidity hitting the market. And you saw, I'll bring up a chart tomorrow of the Baltic Dry Sea Index. You're seeing that spike very, very high. So shipping costs are rising. You're seeing a bid under crude oil prices, and they are breaking out very nicely here. For full analysis, I went over this last night on Thursday Night Stock Market Live. The replay is on YouTube and Facebook. I'll link to it at the end of this video as well. So oil is catching a bid. New highs on a 4-hour basis and on a daily basis today. Now, what's more concerning, and this hits home, you're seeing gasoline prices move higher as well. No breakout yet on a 4-hour basis, but we have a sound base here, and it looks as though we are going to break out. So there's a trade to be had here. It's setting up nicely. When you take a look at oil, and I haven't done this yet, when you take a look at oil or gasoline on a weekly basis, it's looking pretty good. You have higher lows. We are in a triangle formation. We're looking for a breakout here. So it looks as though there's a trade to be had in the petroleum sector, whether it be the energy sector, the energy stocks, or the commodity being oil itself. There's a trade to be had here. It's becoming more and more interesting, and we're going to keep an eye on it. We will send out alerts to members if and when we do execute a trade. And as we formulate a strategy, I will communicate it on either Market Wrap or the Week Ahead Commentary. Moving back to a 4-hour chart and going on to home heating oil. for those out there that are users of home heating oil, as I am, beware. Prices are about to go up because we broke out here on the 17th. We've rallied, pulled back, retested, held, and now we're about to see, in all probability, a continuation move higher on home heating oil. It's early. Another sip of coffee, please. Okay, Folgers. Go to the last drop. I know that's Maxwell House. So if you're in short, let's go to a weekly chart here. For those like me that are on home heating oil, it looks about time to go stocking up for the winter now. Arbitrage this play. Look to go buying your home heating oil right now. Lock it in for the winter, or as far into the winter as you can get, because it looks as though we are setting up for major moves higher here, and especially if and when we pierce. Let's go to let's say 2.12 on housing oil futures. So keep an eye on that level. We'll revisit it from time to time, but it appears as though we are getting ready for a run up to that level. If we break out, it'll be a significant breakout, because what you have forming here is a W formation, a series of higher lows. Not really a W formation, more of a consolidation, but definitely higher lows, right? There you have it. We're breaking out above resistance. No new weekly high yet. That's quite possible today or early next week. And the next level will be up here at this pivot point. Once we clear and close above this pivot point on home heating oil, that's a major, major breakout on home heating oil. It's a major breakout on oil in all probability, on gasoline, all the derivatives of oil. That is inflationary. Now, in short order, you may see a pullback. Good morning, RL. You may see a pullback on gold. Where is gold? I'm shocked I don't have it up here already. All right, so here's gold. I know this is a train wreck of a mess here. Here's gold. Let's drill down here. These trend lines are really why I prefer TrendSpider versus Thinkorswim, because one click of a button, you clean everything up and you can bring them back on. So gold is down this morning. We are still down below the ever critical 1500 level, and that's a psychological resistance level now. So while I'm still bullish longer term on gold, in the short term, a rally in crude oil is quite possibly a negative for gold. Why? Good question. First, hit the subscribe button, and I'll answer that question for you, and take a sip of coffee too. All right, so the reason why gold may see some pressure here short term, and we sold covered calls. We've been selling covered calls on our gold mining trade, bringing in income while we go through this correction on the gold miners and gold. We sold covered calls yesterday. They'll expire today. And we brought in a couple of $100, but on an annualized basis, you're bringing a couple of $100 every week for 24 hours worth of work. That's $10,400 per year in premium with not much risk. So that's why we're doing it. We continue to scalp premiums off of our NUGT trade. We did add this week. We are now up on that trade. So, well, we have been up on the trade for the year. The shares that we purchased this week, we are now up on. But overall, we are up on the NUGT trade about over 40%. I forget the figure off the top of my head. So, gold is rallying off of support this morning. The reason why there'll be a cap on gold, because there'll be a fear in the market that the Federal Reserve can't cut rates. That's the reason why the market wants to break out. There'll be a fear that there is inflation and that'll scare the Federal Reserve. It's not going to happen. The Federal Reserve has already communicated as far back as Janet Yellen. She let it slip out of the bag, and I took notice of it and spoke about it. You've had Powell that changed the rhetoric with regard to, good morning, Patrick. He's changed the rhetoric from saying that we are looking for an inflation target of 2%. He changed that rhetoric, that target, to an average of 2%. So it could be 2% or higher or 2% or lower. You need to watch the average over a whatever period of time they're measuring the average against, yearly. It should be yearly. But they're willing to, in short order, they're willing to sacrifice the buying power of the American people, the taxpayer, by allowing the dollar to drop and to allow prices to rise. That is going to crush all these people out there in the government that pretend to be Robin Hoods for the poor. They're about to crush the poor and the retired. With what's about to happen, it's Armageddon for the people living out there on a fixed income. It's horrible, absolutely horrible. But there are ways to profit from it. We will profit from it. We've been talking about this for a couple of years now. We've been called doom and gloomers, naysayers. I am not a gold bug historically, but the trade is to be owners of silver, gold. Let's bring up silver. We have been long of these names for a while, at times trading in and out of them, but we have seen nothing yet. We have seen nothing yet in terms of prices. Once gold rallies and closes above, on a weekly basis, above $15.20 the ounce, it's game on for gold. In all probability, after we close above that level, we will rally up to the all-time highs priced in dollars. Priced in Aussie dollars and Canadian dollars, we have already rallied to new highs historically. Now, silver is down on the session like gold. Fear of the Federal Reserve not providing enough heroin to the stock market. They're going to do it. They don't care about inflation. They're going to sacrifice the economy for inflation. They're going to let it run. Silver is rallying off the lows in this new 4-hour bar. So we broke out yesterday on silver on a daily basis. We are long of it. We'll probably look to add perhaps as early as today to that trade. We'll be sending out alerts to members. It's now 5:17. Let's move on to the stock market futures. So we'll begin with the NASDAQ. So we were looking to buy the markets yesterday. I was looking at the small caps, but they rallied higher yesterday. They rallied right into a resistance level on a breakout. So I said, you know what? Let's change up strategy here and take a look at the large caps, which are much closer to new all-time highs. And if they break out, there's no overhead supply above. So we should see a continuation rally into next week. But looking at the price action and volume action, I said, you know what? Forget it. We're buying too close to resistance here. We're stone's throw away. Volume is not good. You're seeing topping action across the board, including the transports, which are a leading indicator. So we held up on that trade. Now, overnight, you could see that we have pulled back on the NASDAQ. We are down about 15 and a quarter points at current. But what we did overnight was something that is bullish. And that is we did a retest of the breakout point yet again. So this is a validation, the fact that we are holding this breakout point and it can't be ignored. So what we're looking for here is a rally to new daily highs. That would be a continuation move higher out of this consolidation range. Taking a look at the Russell, the other reason why we couldn't buy the Russell, when you're using a 4-hour chart, when we're closing out the day yesterday, we're trading above the third standard deviation Bollinger Band. You can't buy there, right? You need to be looking to perhaps even short if the daily chart is long in the tooth. Short that rally. We didn't. We weren't going to entertain it. I'd rather see it just come back in, pull back, and hold the rising lower band of support. And we'll see whether or not that holds. If we break, we avoid. Wait for new consolidation. So while we are still watching the Russell 2000, they're a bit extended. They closed out the day, as I mentioned on Market Wrap with members last night. They closed out the day into resistance. I showed a chart of that. So we don't want to go chasing the Russell here. I'm not going to be surprised either way that we get a pullback or a rally. I know that's speaking out of both sides of my mouth, but you know what? I don't want to divine on such a short-term basis which way the Russell is going to go. It could break out for all I know. I don't know it all, right? Well, at this point, what we need to do is look for a validation of the breakout point. All we're doing is showing patience. We don't know it all. We're waiting for the market to show us, does it have the juice, the rocket fuel to head higher? Now, rocket fuel, what do I mean by that? We need volume. We need volume. There is no volume, folks, and that's a concern. We need institutional demand. Sam just dropped in a note. What about the megaphone platform on the SPX? I guess 1300 can be a target. What I don't like is that with QE, no higher high. Yeah, so that's a valid argument, and I've been saying that myself, is that you would have thought that with the Federal Reserve, for the most part, announcing that, yeah, we have new QE, we're here. We're going to goose this market higher for you into the 2020 elections at a bare minimum. Notice how they said that they're going to keep the new round of QE. I'm using QE. They don't call it that. I don't know what to call it. So I'm just going to call it QE, not QE, whatever. They're going to keep this QE program live through mid-2020. What's in mid-2020? You have just about Election Day. So they'll kick the can down the road a couple of months, keep that program alive, allowing the stock market to run. They'll get the president through the 2020 elections. All this is doing is validating our thesis that this market, in all probability, is going to break out. If it doesn't, to Sam's point, if it doesn't on this QE, we have real serious problems here. In short, what is left for the Federal Reserve to do? They're already going nuclear on QE. What they've announced, let's just sum it up in one sentence and one metric. What they have committed to with their new round of not QE is equivalent to liquidity into the markets of an equivalent of the military budget, which is over $600 billion on a 12-month moving basis. Think about that. If that doesn't get this market going, there's a major, major problem. Remember the original TARP that was announced? Many of you may be out there too young or not involved with the markets back in 2007, 2008, when we were just going to hell in a handbasket. But TARP in and of itself was $700 billion, and it got the markets going. And right now, they've committed to $600 billion plus, yet the markets can't break out. I think that they will, but let's keep in mind that we have some concerns here with this market. Patrick, I got an alert yesterday that the banks needed $500 billion to be able to open yesterday. Is that correct? $500 billion sounds like a big number, Patrick. I don't think it's that much, but you know what? We've printed, I think it's about $170 billion in the past couple of weeks. That seems like a high number, but I'm not an expert by any stretch of the imagination on what it takes for the banks to stay liquid. I don't think the banks understand what it takes to stay liquid. That number there may be a number that the Fed bankers are letting filter out there. It's a big, scary number, keeping the shorts away from shorting the bank stocks. And they've done that in the past, just with TARP. If you take a look at a documentary about TARP, where did they get that $700 billion number from? They made it up. Hank Paulson made it up along with Ben Bernanke. They had no idea about what it was going to take to salvage the U.S. economy. All they knew was that they needed to go into Congress with a bazooka. That's what they called it, the $600 billion number. So for all I know, Patrick, you could be right. I'm not that smart. What I'm guessing here is that it's a scary number, trying to keep the shorts away from the banks. Because if the shorts smell blood in the banks, major problem for these markets. There's no way that we are going to break out to new all-time highs. We can. There's no way that we're going to break out and sustain that rally if the banks are tanking. Because it may not be that the banks are taking down the overall market. It may just be that you have traders out there that are buying the S&Ps, and they're looking at the S&Ps here, and they're seeing the S&Ps go higher, but the banks go lower. And if the banks are dropping, why are we buying the S&P 500? They're going to start asking themselves, what's wrong with this market? So my guess is that they're trying to scare the shorts away and reinforce the longs in the banks with that number. That's just a hunch, gut instinct, and that's my feedback to you, Patrick. I hope that helps. And folks, if you haven't already liked this video, if you got any value out of it, if I could please ask you to like it, share with a friend, please, because after this video, YouTube will probably, you got it, Pat. YouTube will probably push you a video from CNBC or Fox News, which is fine, Fox News. But you know, the small collaborator, the small producer is really getting stifled here a little bit. YouTube's a great partner. I love them as a platform, but it's hard to get your voice out. So by you sharing and liking and leaving a comment, it really helps me out with the YouTube algorithms. All right, so let's move on to the S&P futures, since we've been talking about them so much. We have the Dow here. Where are my S&Ps? They're not up yet. Sorry for the delay, folks. I thought I was ready. Apparently not. All right, so you had fun with Baba? All right, I'll bring it up in a second. Bad close for me under the very old... Oh, okay, we'll take a look at that, Sam. Are you long of it or short of it? Or you're flat now? You're out. All right, so S&Ps are now flat on the morning. They were down. So it looks as though we may have a go day here for a rally to new all-time highs. We're right short of that 3,000 mark. We have a bullish key reversal off of a retest of the breakout point. We are now moving on to new session highs. I think that there's a very good chance that we rally today. Now, it's 5:28 in the a.m. This is a 4-hour bar. It won't close until 9 a.m. Eastern Standard Time, so a lot could happen. Did you make money, Sam? Or what was the outcome there? You said you had fun. Hopefully you made money. So the S&Ps are rallying here. They're looking good. But we haven't closed yet. Look for a new daily high on the S&Ps. If we open up above 3,000, in all probability, we're going to new all-time highs, as perhaps as soon as today. Let's move over to Crone. This is a symbol that was brought up to us, I believe it was yesterday. And the shares were spiking in the after-hours session from Wednesday. And this is why I always say don't chase stocks. Don't do it, especially in the after-hours session. Even at the open, don't chase these stocks. Because yesterday morning, when we were looking at this chart, we were seeing Crone trading up here at around $10.50, right at resistance. Here you have it. 10.58 was resistance. We just came shy of it on the, what day was that? 17th? The 17th. But what happened yesterday is that we pulled back, and while we held support, this is not a chart that you want to buy. Not yet anyway. we're going to want to see a consolidation here and then perhaps a move higher. So again, you don't want to go buying at the open when you get these stocks that are just being pumped up in the after hours session. I think there were a couple of block trades that pushed the shares higher, and you don't know the reason of as to why. Congratulations, Sam. You don't need to know the reason why these companies are doing these block trades. So it's best just to stand with your discipline. Wait for the amateur hour to end. That begins at 9:30 a.m. and ends at around 10:30 a.m. I like to open up new trades when I see how the market is poised to close, or as a stock is poised to close, because it helps me out to increase my probability of making money, and that if I buy earlier in the day on strength, we don't give it up. And then I'm sitting there late in the day licking my wounds. I hate that. So a bit of advice there. And we'll go to the weekly chart of Crone, and you can see that if you bought at the highs or after market on Wednesday, you'd be sitting back down below with a loss. And psychologically, that is not good for anyone to have bought at the highs and then watch the pullback, and now you're sitting and hoping. I hate hoping that the stock will go higher. It may, for all I know, but at current, all I know is fact. And the fact is we remain in a downtrend. Rallies up and into resistance levels at this from previous periods have failed. So the probability of us failing is still pretty good. Is there reason to be optimistic? Yes. You did see a couple of large block trades. Is that a reason to go buying? No. I prefer to watch the charts. And on the charts on a weekly basis, we are seeing strength this week. Even if we closed out the week where we closed yesterday, meaning we closed out the day yesterday at 8.86, that is a bullish engulfing of the prior week's move. In and of itself, that's a bullish week, assuming that we don't pull back further on the week today. Now, taking a look at the indicators, you have Stokes, which are putting in higher lows. And breaking out. So the stochastics are looking good. You're gaining momentum. And for those that just joined, thank you for joining. Can you please click that like button, subscribe button, bell button, get notified of future videos? It helps me out a lot, please. Thank you very much. And leave a comment. Oh, you picked up gold this morning? Good for you, Pat. That's not bad. Okay, so thanks, Sam. I appreciate that very, very much. I appreciate it. So Crone is looking interesting, but we can't buy it yet, right? The market is sending us signals. We have sellers above. Don't get lured in by these guys. That's the daily chart. We already went over that. Let's go to a 4-hour chart. Nothing happening here. 2-hour chart. Nothing happening here. I would be stubborn. I would wait for the shares to come to you. I would look for a close above on a daily basis. Normally, I would use a 4-hour chart if we were in an uptrend. We're not in an uptrend. We're in a downtrend. So I will defer to the daily chart for higher level of validation. And I want to see us close out the week above this support level before I would look to get long. And keep in mind that you do have a lot of resistance up at 10.58. That is your price target. Let's move over and into, what do we got here this morning? Baba we had. We'll go over that chart. Okay. Oh, you're talking about Fred, Patrick, on, yeah, I can do that. It's probably not updated yet, real time. We'll take a look at when it's updated. This is national conditions. I clicked the wrong one. All right. So Patrick requested I bring up Fred. And I'm assuming, Patrick, you want me to go over the balance sheet of the Federal Reserve? If not, I'll go to whatever chart I have available. Unless you're referring to the Chicago Fed national conditions, which is not good. We can talk about that as well. But Fred, the balance sheet, which is updated as of... Yeah, this has not been updated yet. This is as of the 10th, or is it? No, it's updated as of the 16th. So, as of the 16th, you could see that the Federal Reserve's balance sheet continues to rise. We are clearly building up the balance sheet here on the Federal Reserve. We are a stone's throw away from being back above the $4 trillion mark on the Fed's balance sheet. And when you take a look at this on a 10-year view, we have clearly broken out here. And at this rate, we'll be at new all-time highs again on the Fed's balance sheet in no time flat. So, the Federal Reserve is expanding their balance sheet at a very, very rapid rate. Let's go over to BABA, and we'll probably leave off with that. Let's go to a weekly chart. So a weekly view looks pretty good. We're holding support on a weekly basis. Let's overlay the monthly chart. Price target here on BABA, were you long and interested, is at 188.54. So not that far away from resistance here on a stock priced this high on a percentage basis. So I would wait. If I was going to buy this stock, I would wait for a breakout on a monthly basis before I got long. Let's go to a daily chart, see what's happening there. Yeah, we were down yesterday. We're kind of in no man's land. We have a bit of resistance back here. I don't see any reason to go buying these shares today. I would rather wait to, let's take the dailies off. I would rather wait to buy strength. When I would get really interested is if we got a rally up and through the 184.13 level and we close there, because that would be a pivot point. That would mark a new higher high on Alibaba, and that would become interesting for me. But right now, I wouldn't buy the shares. I don't see anything, especially since this is a Chinese stock. I would not go buying it right now. I'm not feeling the warm and fuzzies here as I was a couple of weeks ago. So I would avoid at current. What charting software are you using, Sam? Four-hour chart. Yes, I'm not seeing any particular reason to get involved here right now on Alibaba. And with that, folks, I'm going to, I don't see any other requests here. It's about 5:39. With that, I will touch base with you folks over the weekend with best stock charts. Members, we will be working on the week ahead commentary, which is where I review the higher level view of the major averages, how we closed out the week, how I believe that the market is going to open up the following week. It's all about strategy. We'll talk about sectors. We'll talk about our positions and what our strategy is for our positions, as well as the stocks that we're watching. And cheers, Trent. The stocks that we're watching for the coming week. So if you're not currently a member and you think you get some value out of it, take advantage of the 14-day free trial offer. Click the link below. Take care, Samuel. Enjoy Italy. I'm jealous of you. And hopefully I catch you on the members area. And members, leave a comment in the forum section if you want me to go over any of your symbols. And click, like, subscribe. You know the deal. It helps me out. Everybody have a very profitable day. And I'll talk to you soon. Be well.